It's crazy how the market works, right? Yesterday after hours, there were rumors that Snapchat was going to cut its workforce by over 20%, causing the stock price to drop dramatically after hours. This morning though, Snap confirmed those reports and kind of gave a reason of why they're doing it. And the stock price is actually up roughly 13% as I am recording today's episode. So in today's episode, I want to do the following. First, I want to take a closer look at what's happening with Snap at the moment. Second, I want to kind of share my overall thoughts of why the stock price is up even though the news is still the same. And finally, I just want to take a closer look at some of their financial numbers. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So if you go to Snap's newsroom on August 31st, 2022 at 9:15, they posted this restructuring and refocusing on their business. So this is the note that the CEO sent to its employees earlier this morning. So first, they start off saying that, hey, they are having a rough kind of past few months, and their current year-over-year quarter-to-date revenue growth is 8% and is well below what they were expecting this year. So there have been numerous headwinds for the company, right? The iOS changes kind of impacting their advertisement solutions, but you also have the hit of competition from TikTok, and then you also have the current macroeconomics slowing down kind of the advertising space. So all those headwinds are truly affecting the growth of Snap. They do mention for planning purposes, they kind of modeled numerous ranges of outcomes, some assuming the low revenue growth that continues into next year. And for that reason, they have built their 2023 plan to generate free cash flow even during a low growth scenario. Unfortunately, the best way to kind of do that is by reducing their cost structure to avoid incurring significant ongoing losses. The way they're going to reduce their cost is by two ways. First, they're going to reduce the size of their team by approximately 20%. And the way they're going to do that is they're going to discontinue certain investments. For example, Snap Originals, which was going to be their Snap TV show. I think this is a great move. They're also going to get out of Snap Minis, Snap Games, Snap Pixies, among other areas. And there are other applications that have come through acquisitions that they are winding down. For example, Sendly and Voicey. So not only are they reducing their workforce, but they are also reducing the kind of future products that they've been working on. And I do believe that's a great move, especially that they mentioned that they have three strategic priorities. First is community growth, second is revenue growth, and third is their core products, the augmented reality. So projects that don't contribute to this will be discontinued. So I think this restructuring is pretty good news, and I do believe this is the main reason the stock price is up, even though the news is the same. So previously, many investors might have thought that, hey, the company was just laying off 20% of its workforce. And I do want to say that sucks, and hopefully best of luck to all the kind of employees that were affected through it. But now the situation is a little bit different. Yes, they are reducing their workforce by 20%, but at the same time, they are also kind of cutting off any kind of projects that might not have been working as well for the company. And I think that's what investors are excited about. I mean, who really goes to Snap to watch Snap Originals? It's pretty much just to focus on those filters and the augmented reality technology that this company has. I do want to say, for those investors that are expecting kind of immediate financial health improvement for Snap, that's not going to happen, because they do mention in the United States they will provide for at least 4 months of compensation replacement, as well as financial assistance to the team members, so they will still be able to receive compensation and health benefits from Snap. So for the next 4 months, even though they are reducing their workforce, they're still going to be incurring some losses because of all the compensation that they might be giving out. If you are enjoying the episode, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Outside of the reduction in workforce, the company is also adding regional positions to really focus growth in individual regions, right? Because the growth strategy that's working in America might not work in Europe, it might not work in the APAC region. So in Snap, they are realigning their regional operation leadership by creating new president roles in each of the Americas, Europe, Middle East, and Africa, and the APAC region. So right now, the Vice President and Managing Director of UK and Ireland at Google is joining Snap as the President of the Europe, Middle East, and Africa segment, and he will be beginning in October. At the moment, they're still currently searching for presidents for the APAC and Americas region. So again, I do want to say this is another good move, right? It's saying that, hey, we're focusing in just growth community at the moment, but we understand that each region is different, and we need to have a strategy for every specific region that might work for it to overall increase that community growth and overall increase their revenue growth. Outside of the restructuring, yesterday The Verge did announce that Snap's chief business officer and top ad executive, Jeremy Gorman, was leaving Snap, and she was going to be joining Netflix along with Peter Naylor, Snap's vice president of ad sales for North America. So you can see two kind of top level employees in the advertisement business are leaving Snapchat. This might be a little bit more worrisome, but I wonder if they did not like the way the company was moving, especially with kind of that business structuring and employment reduction, that they decided to leave as well. Now I want to take a closer look at Snapchat's financial health. They have roughly $4.9 billion in cash and short-term investments and roughly $3.7 billion in total long-term debt. Obviously, this might change in the upcoming quarter, but right now they do have at least more cash than debt. They are also positive in cash flow from operations, and obviously the reduction in workforce is going to help to at least maintain that in the long term of things. We can see in their most recent quarter they did report a 13% growth in revenue. Right now, quarter to date, they're only up about 9%. So I think unless a miracle happens for Snap, this upcoming quarter will either be a high single digit or a low double digit growth in revenue, just like last quarter. So let me know, what are your thoughts on Snap? As I just finished this episode, the stock is up roughly 14.5%, so it does seem like investors are excited with the news.